But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleague Jacob Sonnenschein, Megan Leonard, and Al Root. So, Jacob, it was a rocky couple of weeks for the stock market, but this week really found its footing. S&P up almost 4%.
Yeah, basically, like you mentioned, the market came into the CPI print Wednesday going, oh, my God, with rates up, is the CPI, is inflation going to be really, really bad, too high? It wasn't. It wasn't so terrible. You were down a few percent from the all-time high, and you got a relief rally.
Now, I want to make sure that we're not overstating how benign this report was. We did get a nice bump on core inflation, but headline inflation, which includes your energy, your food costs, that was a bit painful for consumers, and we're really nowhere near the Fed's 2% target.
Megan, we only care about core. Economists tell us we don't eat or travel.
Yeah, but you know what? But Megan mentions inflation is really not that close to 2% yet. And by the way, the S&P 500 petered out before its all-time high.
True enough. And Al, I will say, in defense of economists, that in the short term, of course, they can diverge, but yes, over the long term, core and headline are pretty close. Alrighty, we had some salacious details, some political potshots in the Pete Hegseth confirmation hearing for Secretary of Defense. But we didn't hear, hey, Pete, the Chinese have 230 times the shipbuilding capacity of the U.S. Hey, Pete, what are we going to do about drones? Congress didn't ask some great questions there.
Yeah, divergence of policy versus politics versus sound bites. I'm feeling a little like, I'll reference Jack Howe, who's not with us. He starts to break out in cold sweats when you talk about politics, but now I will channel Ben Levinson. What about the stocks?
Exactly.
And, Trump 2.0 for defense is really about contracting reform. I think that's the simple way to state it. Faster deployment of new technologies, less oversight and less development money, and less fixed price contracts, more performance-based contracts. So these are the sorts of things we can all get behind. Investors are nervous, though, because they don't like uncertainty. Shares of Northrop, Lockheed, General Dynamics, L3 Harris, some of the biggest contractors, they're down about 10% since the election. So investors, they're not so sure what's going to happen.
And let's hope that anyone selling $200 hammers is out of business soon.
Well, but that's one of the things they want to reform.
Sure.
That $200 hammer doesn't mean that Lockheed was making $200 on the hammer. It was all of the oversight.
Gotcha. Okay, now, in the new warfare, drones are taking on a huge importance. Are drone makers doing well?
Yeah, so one of the big winners, we were talking about the biggest defense contractors down 10%, Kratos. They're invested in hypersonic technology, unmanned aircraft technology. That stock's almost up 50% since the election. So you can see where the winds are blowing.
Wow. Let's switch to gasoline. Megan, gas prices are up almost 1% demand is up almost 1% over the past 4 weeks versus a year ago. Economists say, great. That means the economy's kicking in. Drivers say, terrible, I'm paying more at the pump.
Well, we do know that economists are about it as well, because remember that inflation. I mean,
Sure.
We did see in the CPI that, energy costs did make up about 40% of that gain in headlines. So this is not totally great news. And of course, consumers not super happy either. But it is interesting because oil prices have been on a bit of a tear since the start of the year. And what we haven't seen, though, is the actual prices at the pump also going on a tear. They have been ticking up. We have been seeing, roughly, beginning of December, about $3. Now we're at $3.10, $3.11. This is a little bit more, but there is a little bit more of a muted response here. And that's due to healthy refinery capacity. And that has been in place for a while. And arguably, we should see that come into kick here, too. By the end of the year, we should actually start to see a little bit more of a decline in the second half of the year. So that's good news for consumers.
And Al, refiner stocks are responding.
Yeah, there's too much capacity, so they're not necessarily benefiting from all of the uptick in crude. Phillips 66, Marathon Petroleum, Valero, those stocks have all underperformed the S&P 500 over the past 12 months. The overcapacity might continue to be an issue. The only one Wall Street really likes is Phillips 66.
Yeah, that stock's done very well over the long term and has a nice dividend, too. So, Megan, for the bottom line for drivers, normally in the summer season, because more people drive, more demand, you see gas prices go up. You don't think we're going to experience that this year?
I don't. It's really interesting. I think we're actually going to start seeing some non-OPEC nations like the U.S. and this upcoming administration start to really, drill, baby, drill. I mean, we keep saying it, but it is kind of true. That should actually help with supply, and that should help that second half of the year. We may actually see, Labor Day prices and things like that, where we usually see an uptick, it might actually be a nicer gift, I guess, for consumers.
All righty, thanks very much.